Hello everyone, Andrew Trim here for the Johnson Real Estate Group Market Minute. What I thought I'd briefly touch on today is investment and looking at buying investment properties, and certainly if you're considering buying a unit at the moment in the Brisbane market. Victoria has just increased their stamp duty for foreign investors to 7%. We think that might drive some of the foreign investment that is happening in Sydney, Melbourne North, although that is starting to slow down and there are question marks being raised over the capacity of some of the buyers to settle on properties they've paid deposits on. But if you are considering buying in the Brisbane market and you're thinking that influx of buyers might lead to an increase in price, there's a few things you should consider before you make your investment. Number one is the long-term supply of units in Brisbane, and there are also awful lot of units being approved and currently in council looking for approval. So there will be a flood of units onto the marketplace. And the other thing to consider is the long-term rental prospects of those units. So there's a lot of vacant properties at the moment. There are stories in Brisbane of agents offering up to $500 to tenants to take out a lease, like a cash bonus to take a lease for 6 to 12 months. What that tells me is the underlying demand is not there for the rental market. So a couple of things to look at. Look at the supply. So if there's going to be an oversupply of units in Brisbane, or there's going to be a lot of units built, that's going to hold back the capital growth. Secondly, the ability to get a tenant. So, and your long-term rental return. Not the return guaranteed by the developer for 1 or 2 years, but the long-term viable from the tenant who's paying. So they're the two main things to consider before you jump into the unit market in Brisbane. This is Andrew Trim for the Johnson Real Estate Group Market Minute.